Rhizosorb is redefining what growers expect from phosphate fertilizer. Backed by data and built for performance, Rhizosorb helps reduce phosphorus losses, improve uptake, and boost ROI without increasing input costs. Join the next wave of growers switching to the next generation of phosphorus fertilizers by visiting phospholutions.com.
Okay, let's talk markets. We're joined right now, coming out of Chicago. It is Ted Seifried from Zaner Ag Hedge. How are we doing today, Ted?
Great, Sean. How are you, buddy?
I'm doing good. Hey, football starts, and what I said at the beginning of the show was we could talk Bears when it comes to football, but when we get to the markets, I hope it's more of the Bulls.
Yeah.
But what is your outlook for Bears football this year, my friend?
Well, the beautiful thing about living in Chicago is that we have both the Bears and the Bulls, so we can talk both. But yeah, I mean, look, it's hard not to have really high expectations for the Bears this year. I know we had pretty high expectations for the Bears last year, and that didn't really come to fruition. But they looked like, at least on paper, they're going to be even better this year. I mean, the offense has so many weapons. You do wish that we may have picked up a running back. I don't know. I don't know why everybody's so down on DeAndre Swift. I think he's decent. Maybe he's not a 3-down back, but he's got some hands. He's got some shiftiness. So yeah, the offense looks great. We've done a lot to really bolster that offensive line. I think the defense was better than they looked last year, and I think they'll be in truer form this year, more like Bears form. We like our defense. So
Yeah.
yeah, I mean, it's really hard not to be excited about it, especially with how the preseason's gone. You can't really tell from preseason, but I mean, it was like 38-3 against the Bills was great to see that.
Yeah, that was
But yeah, no, I mean, it's hard not to be really excited. I'm actually going to the Bears game in Las Vegas
cool.
at the end of September with a group of guys. That'll be a lot of fun.
Good stuff. Well, that's pretty good. As long as the quarterback can get through maybe the first two reads once in a while and not run backwards too many, that we do a little bit less of those things, we're going to be a lot better than we were last year. Okay. So, Ted, markets. I get, we had a couple weeks ago, we had the WASD where they were like 188.8 on corn. ProFarmer Crop Tour, which you were out on, you were scouting on, you saw it firsthand, down in 182 and change. What are you thinking? What's your number?
Yeah, Sean, I mean, when I went home at the end of last week, Friday, I was thinking that the corn number exists somewhere between ProFarmer and the USDA. I think that 188.8, while we can argue whether that potential was there or not, I don't think it's there anymore, especially considering the disease that we saw in the West and the dryness that we have in the East that is lingering. But, throughout the weekend and just watching and talking to people on how quickly the southern rust is really spreading, it is very rampant. And I got to say, it's we see rust every year out on tour. This was more than I've ever seen in my 11 years of being out on tour. But even then, I wasn't expecting it to really, really expand very, very quickly. And now, guys that I didn't, Southern Indiana, that I just didn't think it would get there, it's there, right? And so, and tar spot is becoming more and more of a thing. So I'm actually really surprised how fast it's spread and how widespread it has become now. I am starting to lower my expectations on corn yield. But, I was talking to a guy in Texas earlier today, and he's like, look, we have southern rust every year, and we fight it every year. And we are continually, we're applying fungicide. But when it shows up this late, and again, their growing season is a lot different than ours, but he was speaking for this late in the season as it compares to us here in Texas. But if I were in Iowa and I saw it showing up right now, I wouldn't bother with it because I don't think it would really take away from the yield enough for me to spend the money on another application. So from that perspective, from a guy that deals with it all the time and knowing, the time of year that it's coming for the guys in the Midwest, I thought that was an interesting take. Maybe it looks a lot worse than what it actually will take away from yield. But the thing is we don't know, right? I mean, this is the most widespread we've really seen southern rust in the heart of the Corn Belt. And so there's that uncertainty. And when you have the funds that had been as short as they were, they don't understand it. They don't know better than ProFarmer or any of us going out there and looking at fields. They just know that there's a problem. We're not sure what this means. Let's get out of some of these short positions, and that's really been the feature here, really for the last 2 weeks. But I mean, you've seen it really accelerate Thursday, Friday, and today with the 9-cent bounce off of lows that we saw here today. So the funds moving more towards a flat position. I don't know if this is an event for them to go long on, but I think they want to get away from this uncertainty that they have, and that the market has at the moment. And I think that's creating a pricing opportunity for producers. I don't really get the feeling that we're going to go straight to the moon here. I don't know if we're going to go take out those February highs, for example. But this is a nice little pre-harvest bounce. I do think there's a lot of bushels that are going to get sold, though, once we get into harvest. I'm not convinced that we have our harvest lows in, quote unquote harvest lows, because obviously, coming in at the 12th of August for corn and the 6th of August for soybeans, that's well before we even started harvest. And when we do that sometimes, right? But when we put in pre-harvest lows, it's usually a function of two things. One is we have a whole lot of old crop bushels to move. And that's not really the case this year. I mean, we ended up with a much tighter balance sheet for both corn and beans than what we were originally expecting. Exports were better than expected. I don't see a ton of bushels out there that need to get moved in order to clear out space to store this new incoming crop. And then the second thing is when you have a new crop that's coming in a lot lighter than expectations, which maybe that is the case. However, Sean, I still think this is a really big crop, especially for corn. And we didn't have any of the summer weather rallies. It's been 2 years now since we've had any, midsummer weather scare spikes that have gone up and hit those resting orders that guys have. If you're well trained on your marketing regimen, you have these orders resting to get hit by these weather spikes during the growing season. And for 2 years in a row, that hasn't happened. And now we've got guys that are really undersold going into this harvest. And again, maybe it's not a 188.8. But let's say it is closer to the ProFarmer 182. That's still a lot of bushels that I think are going to need to get sold during harvest. So I'm very skeptical that low is in. But I am watching this rust issue. And again, how dry the month of August has been, especially for the East. I mean, it's definitely not the crop we thought it was in the beginning of August. But I still think it's very big. I still think there's a lot of bushels that are going to pressure. And it's been a nice rally, but I'm not so sure how much further it has to go, especially if the funds get closer to flat. I'm not sure they're willing to flip long in this climate.
Yeah, there's definitely concern about the storage that's out there. Depending on what this yield is, do we have the capacity to actually store this crop? Depending on what that corn yield shakes out at, is what moves the needle for some of the funds to get more to the long side. One, like a year-round E15 announcement, and two, some sort of blockbuster commodity contract with China. Are those kind of really the two things?
I mean, that would do it. I mean, as far as them going long, like I really get the feeling that the funds want to be short. They just don't understand the situation right now. And when they don't understand something, they want to be flat. Once we get into harvest, if we start hearing yields are actually really pretty good, I think they'll start to get short again. Alternatively, if we get into harvest and we are shocked at how actually bad things are, that might be a catalyst for them to go long. Otherwise, like you said, it would have to be some new major demand trigger. And unfortunately, a blockbuster deal with China, I think that'd be wonderful for soybeans. We need it for soybeans. We need to get the Chinese business for soybeans, but I don't know if they'd be willing to buy corn. They've got this new corn deal with Brazil. And I think if they're going to buy corn, which I'm not sure they will, I mean, things are kind of saying that they had a pretty darn good corn crop themselves. But if they're going to be buying corn, I think they have to protect that newly formed relationship with Brazil. We know from a political standpoint, they would like to continue to keep Brazil happy. So if the Chinese do start buying corn in a big way, I think it mainly favors Brazil. And Brazil has a big corn crop that they've yet to even really start selling. That is just sort of waiting in the wings. And so that kind of scares me longer term. But if the mandate went to even E11, E12, E15, anything like that, that'd be significant. That would help. And if you put that on top of a smaller crop and a potentially tighter balance sheet, then all of a sudden maybe we have something to talk about. But yeah, I mean, my problem is that I think there's a lot of demand on that corn part of the balance, on the corn demand side of the balance sheet that might not really be there, right? I mean, you look at feed and residual, 250 million bushels higher. We don't have the animals for that, Sean. I mean, that's all residual, and residual comes and goes based on production, basically. So if they cut yield, which I think they will, I don't know if it's on the September report, by the way, but at some point I think they will have to cut yield down from that 188. Well, a lot of that can be offset by lowering that feed and residual demand. I think the export or the I think the export number is solid for right now. I'm worried that a lot of our exports are front loaded because of that South American crop, but for right now, I think you leave the export number alone. But the ethanol number, 100 million bushels higher last month. I don't know. That one's a little hard to justify too. We're just not driving as much, and exports are good, but I don't know if they're good enough to justify that. So I'm worried that unless we get below a 182 on a national average yield, again, possible. I'm just not feeling that at the moment. But if we get below a 182, then I think we can start talking about a carryover below a 2 billion bushel carryover. Otherwise, I don't really think there's a good reason for a longer term bull market or for the funds to get terribly excited about carrying a long position.
Well, and on top of it, I've heard a number of different analysts talk about how there's an understatement of the size of the South American crop.
Yeah.
So that's like a whole nother, like I think it was, I'm trying to remember who I heard it about, if even if you were down to like a 184 on the U.S. corn yield, it doesn't really change their balance sheet because of how they think there's actually more crop out there in South America, for example.
Yeah, Sean, like that Brazilian corn crop. I mean, the USDA has been very stubborn about keeping it at a 132 million metric ton crop. I mean, there's been a lot of estimates, private estimates. Even CONAB is higher than the USDA, which is a very rare occurrence. Usually, the USDA is significantly above CONAB. I mean, there's a lot of things saying that Brazilian crop's a lot closer to 140 million metric tons. So, yeah, I mean, if you take something out of American production, well, here you're replacing it with South American, with Brazilian in particular, production.
Ted,
and again, they've got
Chicago.
A massive corn crop to export there.
You're from Chicago, the home of Oprah. You know, you get some corn. You get some corn. We're going to need everybody to take some.
Everybody gets some corn. Who needs some corn? Everybody gets corn.
How long can China go avoiding buying U.S. soybeans?
It's a great question. You know, I was kind of thinking they would maybe make a purchase right at the end of August. That didn't happen, at least not explicitly. Maybe there's some, unknown destination stuff that's to China, but it's not been big enough to make a splash or make a difference. If you look at the unknown destination sales that we have on the books, it's a lot less than we normally would at this time of the year. Anyways, so that even goes further to speak on how China's not buying. I've heard some people in the cash side of the business talk about China being able to get through maybe end of October into November before they have to start buying aggressively. I hope that's not the case, because by that point they may get their wish. They may get prices down into the areas that they really want to start buying. So, yeah, I don't know. This is the longest it's really ever gone in a non full on explicit trade war with China not buying. It certainly feels like we are in the thick of a trade war with China, right?
Yeah.
And so,
okay, so Ted, could they? Is it a case of just when, not if? Could they ever go the whole winter without buying U.S. soybeans?
Yeah, no, I don't think so, Sean.
Okay, yeah, that's what I thought.
I think it is a case of when, not if, but also how much, right? Because it might only end up being 60% of what we were expecting from them, and that would have a huge impact on our exports. There's not enough. We talk about demand displacement, meaning, if China's not buying from the U.S. and they're trying to buy from South America, Brazil, and I'm going to include Argentina there too, because they can buy raw soybeans from Argentina. That takes away from the Argentinian crush. That means more business for our export business for soybean meal. I mean, these are good things. However, there's not enough soybean demand in the world from other countries not named China to offset China, right? And if we lose 40% of what we would normally be doing with China, we just can't make up for all of that. Not even really close. So I think at this point we have to be pretty darn concerned about the fact that China isn't buying and that they're going to try to avoid us as much as possible. They're not going to, at least I don't believe that they'll be able to avoid us completely, but it might not be enough to get us anywhere near what the USDA has for the export expectations that they have for this now current marketing year.
Well, we've been talking to Ted Seifried from Zaner Ag Hedge. Ted, if somebody wants to get a hold of you, how do they do so?
Yeah, you can reach me directly at 312-277-0113. Aside from that, you can find us on the web at www.zaner.com. You can sign up for my afternoon recorded commentary that you call in and listen to at any time. And also sign up for our brand new chief market analysts newsletter, Karen Braun, which is going out. She's doing it right now. And then I'm also on the Twitter or the X. I'm at the TED Spread.
Nice. Well, I get Karen's newsletter. It's fantastic. So encourage
It's really good
to check that out, of course. Hey, Ted, thanks a lot for joining us. You are from Chicago, the future NFC North champion Chicago Bears.
Love it.
Ted, thanks a lot for joining us.
Thanks for having me, Sean. Always a pleasure.
For the latest ag news, agronomic advice, and more, check out realagriculture.com and Real Ag Radio.